And the noted market watcher Ed Yardeni, president of Yardeni Research, thinks the record-breaking rally is just getting started. Take a listen to his bullish call on closing bell yesterday.
5,400 by the end of next year, and then 6,000 by the end of 2025. I think this is a bull market that has legs, that's going to continue to charge ahead. I think what we're seeing here is a significant relief rally. And the relief is that we're not going to have an economy-wide recession. And the relief is that inflation, in fact, can come down without a recession.
Well, let's get some market reaction from Jack Ablin, founding partner and CIO of Cresset Capital, and Jessica Inskip is director of product at OptionsPlay's. Jessica, nice to have you in the house.
Nice to be here. Thank you so much for having me.
Jack, let me begin with you. Valuations are really not stretched if you look at the broad market. There are some parts of the market where the valuations are high historically, others where they're low. Is there any reason for this market not to keep climbing?
Well, you know, it's funny. I've known Ed Yardeni for a long time, and he's been bullish most of the time. I will say he was flapping his arms around Y2K. But you know, this time I think he does have a legitimate case. It's a bit of a stretch. 5,400 would be 20 times 2025 full-year earnings, so certainly within the realm. We would need a 10-year BBB bond yield of about 5, which would equate to a 10-year Treasury of around 3.5. Certainly not too far from where we are today. So really, the whole thing is predicated on earnings. It's certainly not a stretch to get to 5,400.
Jessica, where are you on this argument of whether the market can continue to move higher or not?
I'm definitely in the bull camp, and I do believe earnings is the next catalyst that we're going to be looking for, and we are actually leaning towards the overbought territory, so I'm looking for some consolidation. But really, I think the question we should be asking is, can we have this increased growth, and can we have a deflationary environment at the same time? And we've seen that with the data. And so I expect to see that to follow through with the market. And I really think the answer to that is AI. We see productivity increases within employment reports. That equates to companies being lean and being able to do more with less.
Does it get any better than that for a market? Growth plus deflation?
It's what they call the Goldilocks scenario, isn't it?
Yeah. And you wonder because, I mean, Jack, maybe you can speak to this a little bit, but are we seeing any pressures on top line growth? For instance, as we've seen inflation go from 9% to, 2.5%, call it?
Well, one of the things I do watch, and certainly the retailers, and you talked about consumer goods just before the break, and my concern is a lot of the year-over-year revenue growth that they've enjoyed has really been just pricing, right? So volume growth has not picked up, but revenue growth certainly aligned with pricing. And of course, if we do get disinflation and potentially deflation, that could turn things around pretty quickly.
Right. Although I guess, Jessica, some would say we are going to get that, or maybe we're going to get that in pockets, and others say, not so much. We're still kind of seeing, especially in services and that kind of thing, a little bit of cushion that could help corporate earnings.
Absolutely. Services were the sticky one. We're absolutely seeing it in goods, though. And we have this resilient, selective consumer. We saw it with going to the Taylor Swift concerts, or we just choose where we want to spend our money, and they're savvy.
It required some resilience to afford Taylor Swift, right? You have to have resilience.
You certainly do, but not resilience to go there. Great experience.
Are there particular sectors that you have your eye on as values right now?
Absolutely. So it's definitely broadening out within the value sector. I think financials may even be set up really, really well. That chart also looks really, really well, and that will definitely play out with the Fed pivot that we see. So that should be interesting. But overall, I do think there are pockets within the economy we have to pay attention to the AI story. I think that is still the growth that has not been recognized. And therefore, those really high PEs that we see with that Magnificent Seven are actually justified because that E in that equation may not be correct.